Hey guys, it's Will. Today I wanted to talk about this fair tax, proposal that's coming from the Liberals in Canada. Justin Trudeau, Bill Morneau, the finance minister. I started to start talking about politics and society, free speech and stuff like that because I'm seeing a lot of things that are you know worrying me about society. You see things that happen in Venezuela when taxes go crazy and the business people leave the country, and then there's nothing left, and people get really desperate. And so the understanding the value of productive people who are generating, the technology, the iPhones, the farming, the food, and doctors that help us. And there's a lot of resentment and envy now out there about people, and they don't always know all the facts about like taxes and how things work. So I wanted to talk about small businesses right now and sort of how that structure works. And because with this debate that's been going on, so basically the Liberals want to increase taxes in a few scenarios on small businesses. One of them is passive investments. So when you make investments within your company, so that's like buying stocks or bonds or mutual funds and things like that within the business, they want to increase the taxes on those dividends and that. And I'm going to explain some of the things around that. There's other aspects that they want to target, which is, paying family members. And obviously, I feel that a lot of times these family members are doing legitimate work and should be compensated for that. But I'm going to mostly talk about the corporate tax and then the dividend stuff, just to kind of explain. So what they're saying is somebody who invests outside, like an employee invests, has so much money left over after taxes to invest, and they think that the person that's in the company, like a small business owner, has more money left over because of the lower tax rate for small businesses to invest, and that's not fair. That's the kind of the simple explanation, but that doesn't really cover all the specifics. So first of all, small business tax rates, just generally speaking, are at a rate that is supposed to encourage people to start small businesses because they actually employ a lot of people. There's a lot of jobs created from small businesses. And just in general, if you do happen to make more money over time in a business, or the people that are making, let's say, higher incomes are paying the majority of the tax. So when people say, somebody making 50,000 shouldn't pay more tax than somebody making 250,000, that doesn't really happen because, if you're looking at percentages, sometimes that could be deceiving. But if you look at the actual amount of tax, obviously the more money you make, the more you're going to pay. So the actual amount of tax people are paying who make that much more money are going to actually pay more tax. But just to get back to the small business situation, there's different things I want to talk about, but the fairness aspect is really, it's just a horrible way of pitting employees against small business owners. And the idea of fairness and stuff like that is really sets up like, there's a lot of envy and misinformation. You really don't want to be envying these people that might have started a small business because it's a lot of hard work. These people are usually working long hours. They have to pay staff and meet payroll and other obligations for leasing, rentals, office space or whatever, equipment, before they even pay themselves, and they might go years without being able to pay themselves a salary. But if we're going to talk specifically about the passive investment situation, so what happens is if you happen to be at some point end up lucky enough to kind of have money left over and you start to build up some money, you might want to use that for like maternity leave. Like if you're a small business owner, you don't have a lot of the benefits that an employee has. So you might use it for maternity leave. You might use it to buy equipment. So instead of just having the money sitting in your business, earning like basically no interest, you might invest that for a few years and then use it to buy something for your business. And so people will say, well, why don't you just put it in an RSP? Well, if you take the money out of your business, you get taxed again. So that's another thing. People don't realize that if you just compare employee to small business, it's not really accurate, because the money in a small business gets taxed at a corporate rate. And so if at some point you have money left over and you want to take that out to pay yourself a salary or dividends, you get taxed again. So you'll get taxed on that salary that you take out. So you can't just compare what's left in the company versus what the employee pays. The other thing is, when you take the money out and you put it in an RSP, if you decided a couple years later you need to put that money, you want to buy some equipment, if you take the money out of the RSP, you're going to get taxed, and then you got to put it back into the business. So you don't want to be doing that. So the money sits in the company and for that rainy day or whatever, and then you use it at that point in the future. So if you take it out, you're going to get taxed as a salary or dividend, and then you're going to, if you put it in an RSP, whatever's left over, it's not readily available in the future for your business. Now it's outside of the business in your personal hands. So if you're investing inside the company, the dividends that you get from these companies, so if you buy like a stock in the company, those companies pay tax, and whatever's left over in that company, they distribute as dividends to shareholders. So that's why dividends are taxed at a lower rate, because if the income's already been taxed in the company. So that's why if you buy stocks and you get dividends, that your dividend tax rate is lower, because the company's already paid tax on that income. So if they're going to go and increase the taxes on those dividends, it doesn't really make a lot of sense, just at a technical level, because the reason those dividends are lower taxed is because the income has already been taxed in the company. So that's one big point that I wanted to make. And the other thing is, when you invest inside of a company, you don't have a TFSA or RSP in that company, so you don't get the benefit of compound interest at the level you would if it was compounding within a TFSA or RSP. And in order to do that, you'd have to take it out of the company, which you would get taxed again as a salary or dividends, as I mentioned. The other thing is, when you compare employees to small business owners, is that employees usually have vacation pay, sick days. They usually have some kind of extended health care, like for drugs and prescriptions and stuff if they're full-time. And maternity leave could be a benefit. So there's a lot of benefits, and obviously the TFSA and RSP, that a small business owner doesn't have within the business itself. So when you're investing in buying stocks short-term or whatever, you're not getting those benefits, and you don't have the sick days and stuff. So if you miss days and you have to pay yourself, you're using that from the funds that you've generated. And then the other scenario would be if you decided to keep the money in the business long term as a retirement plan. So in that case, like I said, all that money that you've been investing has been growing, hopefully, but without the benefit of the compound interest. So all the dividends, every year you pay tax on those dividends, and so it reduces the amount that you reinvest, so that it's not compounding as quickly. And then in the future, even though that you've theoretically had more money to invest, assuming your business has gone well, in the future, when you do take that money out of your business, you pay yourself either a salary or dividends, and you get taxed on that again. So whereas like somebody who had a TFSA wouldn't have been taxed, and they had the benefit of all the, in the future, like when they take it out, or they have and plus they have all the benefits of tax-free growth. Or if you invested out in personally outside of an RSP or TFSA, when you decide to spend that money, there's no additional tax, whereas that it's sort of deferring the tax in the company, like some of the tax. I mean, you're still paying every year on the dividend taxes, but eventually when you take the money out, you will get taxed on it. So there's as you can tell, it might be too much detail for you, but there's a lot of things going on when you have a small business. The other thing is the risk that people take when you have a small business. You're hiring people, you're trying to get clients every day and generate that income. And whereas if you're an employee, somebody's offering you that job because they've already obtained the clients and the work, and they're paying you. So you have all these benefits and potentially even retirement pensions. A lot of times companies will contribute to a retirement pension. So there's if we're going to get into class warfare and start comparing employees, it's really dangerous. Employees have so many protections. I mean, union employees have sometimes a lot of job security protection from that. I mean, it just gets in a really dangerous thing. And then the other thing you have to ask yourself is, why are they trying to do this? And the reason is that they need money to spend. The government needs money, and I'd be more open to cutting spending in a large number of areas, because if you look at our debt, especially Canada and the U.S., like I said, the U.S. has hit 20 trillion. The spending is just crazy, and you just got to keep getting. And then the amount of money you have to pay on the debts, so the interest payments are getting huge, and so it's just unsustainable. We really need to get the spending under control. So I hope you guys like this. Let me know what you think in the comments. Talk to you later.